Welcome, trend followers, to the weekly trend trader. Before we get going, don't forget to like, subscribe and hit that notification bell because the notification bell is the one that allows YouTube to tell you that we've uploaded the latest video. And this is it. What fantastic markets we've been having recently, and I'm so looking forward to go through with you and share with you some of the fantastic trends that we've been riding here at the Weekly Trend Trader. Also, don't forget to share it with your friends, because some of your friends may be looking to build a secondary income, a side hustle, or something that they can do and keep their job and make a substantial amount of money on the side of that primary income that they have, or even turn this into their primary income. Okay, so without further ado, let's have a look at what's been happening recently. So as we look at this market here, 2-year chart, those of you that have been following me for a while will know this. Welcome back. We've got a 2-year chart here. We've got the 52-week moving average that was falling, and we can see a market here making lower lows. The first one there at 4,200, and we make the next low at 3,700. And we make another low there at 3,600. So we're in a downtrend, and we've got a falling 52-week moving average until something changes. Have a look at the chart at 3,800 on the S&P. On the S&P 500, 3,800, it's firstly a round number. Markets love to reverse at round numbers. Those of you that have watched other of my videos will know this. So we've got a round number reversal. We've got a double bottom at 3,800. Look there in December and in March. Double bottom, 3,800 at a round number. We run up, we test that 52-week moving average. We close higher on a decisive weekly close, but then we get follow through, and the market continues to move from March, where we enter the trade, all the way up into 4,600. So at about 4,100 we get the buy signal, and the market is still bullish and continuing to move to the upside at 4,600. Lovely little bounce on the RSI. If we look at the 50 in March, we can see that bounce there, bouncing around the 50 level, which is a bullish bias, and the market moves higher. Let's take a look at the Nasdaq now by way of comparison. So here's the Nasdaq. You see that familiarity there with the lower lows that the market was making. Again, similar to the S&P, 13,000 was the first low, 11,000 was our next low, and then we get this little bit of something different happening. Take a look at 10,500. At 10,003 to 10,500 level, we get a double bottom in place. There's a double bottom there. The market runs back to the 52-week moving average to test the 52-week moving average. We hit 12,500. We fall back for a couple of weeks. We retest the 52-week moving average at 12,500. We have a bullish engulfing bar right there in March. Look at the first week in March. It's a red bar. And look at the next week in March, how the top and the bottom of the bar engulfs or overshadows the previous week. That bullish engulfing bar tells us the market has changed. We're now going to move to the upside. We've engulfed, we've overtaken. The buyers are stronger than the sellers, and something has changed. Then we close at 12,500 that week. That's our buy signal. But not only that, closing above the 52-week moving average in a decisive way, we get follow through. If you look, the market moves to 13,000, forms a little bit of a base there, and then absolutely takes off. So we bought this one at 12,500. We're still long at 15,500. Is that significant? Is that a good trade? Trend followers, it's an absolutely fantastic trade. The EMAs, the exponential moving averages that we use here, have captured this trend, and it's been a fantastic win for us so far. Let's put some numbers to this. So if you got in and bought at 12,500 back in March, as we did, at, let's say, something reasonable at just 10 per point, 10 euros per point, $10 per point, £10 per point, you now have 3,000 point profit. So 10,000 times, £10 per point times 3,000 is a 30,000 pound, euro or dollar profit. For doing what? As I like to say, for sitting on your hands. You got paid to sit on your hands, to control your motions from March all the way so far until July, and the trend hasn't finished yet. Controlling those emotions, you can get paid very handsomely by the markets. Here we've got £30,000 for you putting a trade on one Friday evening at the close of the candle and sitting on your hands until July. Let's say you had a little bit bigger trading account. If you did, and you were to trade this same move at £100 per point, buying at 12,500, 3,000 points, you have now made so far £300,000, dollars or euros, for doing what? For sitting on your hands and following trends. That's why trend following is so powerful. Sit on your hands, learn to control your emotions, and you will be paid handsomely trend following by these financial markets. Now, I know I've talked about a lot of things here that you may not have heard before. So what I'll do, I'll put the more recent video in there that I did last, the one about trading the bounce, and I'll also put the strategy video in there, because the strategy video is the one that will help you to see exactly how to trade in this way while you're doing your job or doing something else and make either 3,000, 30,000 or 300,000 if you've got a big enough account to handle that size position. Thank you for watching. Thank you for listening. Thank you for tuning in to the Weekly Trend Trader. See you again soon.